If you're a doctor, a resident, a fellow, or even still in med school and you're thinking about buying a home, there's a loan program out there that almost nobody in healthcare talks about, and it could save you literally tens of thousands of dollars. It's called a doctor's mortgage. And if you haven't heard of it, don't worry, most people haven't, and that's exactly why we're here today. What actually is a doctor's mortgage? A doctor's mortgage, also called a physician loan, is a specialized home loan product. It's offered by select banks and lenders specifically for people in the medical field. And it was designed because lenders realized something important. Doctors are a really unique financial case. Think about it. You've spent your entire 20s, sometimes your early 30s in school and training. You might have $200,000, $300,000, even $500,000 in student loan debt. You might have just started your residency and you're making $60,000 a year after years of earning nothing. On paper, you sound like a terrible candidate for a mortgage, but in reality, you're really one of the lowest risk borrowers out there. You have a career path that almost guarantees income growth. Default rates for physicians are extremely low. Banks figured that out, so they built a loan program just for you. Now, who actually qualifies for one of these? Most lenders that offer doctor's mortgages will extend them to MDs, NDOs, dentists, oral surgeons, podiatrists, and sometimes veterinarians, pharmacists, and certain advanced practice nurses like CRNAs and nurse practitioners. It just varies by lender, so you always want to check. But here's the thing that surprises most people. You don't have to be an attending physician making $500,000 a year to use this. Some lenders will give you a doctor's mortgage the moment you have a signed employment contract for a residency or a fellowship, before your first paycheck even clears. That's huge, because one of the biggest pain points in residency is you finally have some stability, you want to stop throwing rent money away, but the traditional mortgage world basically tells you, wait, you don't qualify yet. Doctor's mortgage, that's a different conversation. Why is it a financial hack? All right, here's where it gets really good. Let me walk you through what actually makes this loan different. Number one, little to no down payment. Most conventional mortgages want 10 to 20% down. On a $400,000 home, that's $40,000 to $80,000 you need to hand over up front. Doctor's mortgages often let you put zero down, up to 5%, and still get approved on a significant loan amount. Some programs up to $1 million or more with zero down. That's capital you get to keep in your pocket or put towards paying those student loans. Number two, no PMI. Okay, PMI stands for private mortgage insurance. On a conventional loan, if you put down less than 20%, you get charged PMI every single month. It can be $100, $200, $300 a month just tacked onto your payment. It protects the lender, not you. Doctors' mortgages, they waive it. Even with low or no down payment, that can save you thousands of dollars a year. Number three, student loan debt is treated differently, and this one's a game changer. On a conventional loan, lenders calculate your debt to income ratio. They look at how much you owe versus how much you earn. If you're carrying $300,000 as student loan, that monthly payment wrecks your DTI on paper. But doctors' mortgage lenders are trained to look at this differently. Many of them will exclude the loans that are in deferment, or they'll use a smaller percentage to calculate your obligation. They understand your earning trajectory, not just your current salary. Number four, they qualify on a future contract. Like I mentioned earlier, if you have a signed employment contract, certain lenders will approve you before you even started the job. They're underwriting your future, not just your present, and that's very rare in lending. Put it all together. No PMI, low to no down payment, flexible student loan treatment, contract-based qualifications. You start to see why the right person can use this loan and get into a home. So how does this actually stack up against a conventional mortgage? Let me give you a side-by-side so it's clear. Let's say you're a third-year resident, you're buying a $450,000 home. On a conventional loan, you'll need somewhere between $45,000 and $90,000 down. You'd likely be paying PMI every month because you don't have 20%, and your student loan debt is probably tanking your DTI ratio, making it even harder to qualify. The lender might just say no. On a doctor's mortgage, you might be able to close with 0 to 5% down, no PMI at all. Your student loans are viewed through a different lens, and as long as you have that employment contract, you may be able to close before your first day of work. Now, I want to be honest with you here because this is important. Doctors' mortgages aren't always the cheapest loan. The interest might be slightly higher than a conventional 30-year with 20% down. Some lenders have restrictions on the types of property. Not every lender offers them, and the terms vary a lot. So the play isn't always use a doctor's mortgage no matter what. The play is know it exists, understand what you can do with it, and work with somebody who can run the numbers and help you figure it out if it makes sense in your specific situation. Look, if you're a doctor, a dentist, a resident, a fellow, or even finishing medical school and buying a home has felt like something you have to wait on, I want you to hear this clearly. You may have more options than you think. A doctor's mortgage could be the difference between buying a home now versus waiting years, between keeping capital in your pocket versus draining your savings on a down payment, between understanding your options versus leaving money on the table. My job is to make sure that doesn't happen to you. If you've got questions, drop them in the comments. I read every single one of them. And if you're in Northwest Florida or planning to relocate here, reach out directly. I'd love to talk through your specific situation and connect you with the right people to make it happen. Don't forget to follow for more content like this. Most people in healthcare are brilliant at medicine and completely understand when it comes to financial education for their personal life. That's the gap I'm trying to help close.